Fantastic. There we go. Alrighty, for anyone who's just slowly joining the webinar, welcome. My name's Tom. I'm hosting the session today, and with me I've got a guest presenter, Natalia, who
Hi guys. Hi everyone. Hi
Natalia looks
Tom.
after runs Easy Super, and so she's our kind of guest expert, all things self-managed super funds and tax today. Um, So what we'll do is we want to probably just wait for everyone to join. So we'll give everyone a minute or two to come across. But for those of you who are here, welcome, and thanks for jumping on your Friday afternoon. This is a really we're excited hosting this session. I think there's been a lot of significant changes to tax that have been proposed recently, and they have pretty widespread impacts on crypto investment, which both Natalia and myself and the team at CoinStash obviously, it's really important that we are across those changes. And that's why we wanted to host this session to provide some information for those who are kind of wondering what it might mean for yourself as a crypto investor. So we've probably got a few of Natalia's clients here with us. So welcome a few CoinStash clients, and there's a few people from the public who are joining. So if it's your first time, uh, welcome. And yeah, over the next 45 minutes or so, we're just going to cover initially what this budget, proposed budget from our Labor Party has brought in, and how it might change crypto investment, and what it kind of impacts when it comes to your super, as well as anything maybe outside of super. This is recorded as well. So if you miss this session or if you jump out at any point, there will be a replay available. And you should be able to jump in and start asking some questions at any time in the Q&A panel. And we will spend a good chunk of this session, because I think Natalia probably agrees. That's really where a lot of the good, practical, relatable stuff comes out in the discussion. So again, welcome. One thing I do want to do is pass across to Natalia to kind of just introduce Easy Super and herself, and the service they provide. So Natalia, welcome and thanks for joining us.
Thank you, Tom. Thank you, CoinStash, for inviting me. So my name is Natalia Clark, and I'm a director of Easy Super. This is accounting company specializing in self-managed superannuation funds. I can see a few clients of mine is on this call as well, which is a welcome to everyone. And today we are going to cover a very hot topic about tax changes with the current budget, proposed, budget, and also self-managed superannuation funds, and what will change and what will not change. So we are going to discuss that. But what we want to hear from you guys. We want to hear your questions. We want to understand what bothers you. And obviously, we will try to cover all your questions so you have a little bit more clarity after today's webinar.
Great intro. Thanks, Natalia. So let's just walk through. You guys have already heard from us about what we're going to talk about today. This is just a general kind of disclaimer. Obviously, if you do decide you want to kind of proceed with anything beyond this webinar, it is always so important to go and seek professional advice. This is just information. We want to make sure that people are up to speed with what's impacting them. Again, we've introduced Natalia and myself. I look after the SMSF investors for our platform. So I've worked with CoinStash for 2 years. We are probably one of the more specialized exchanges in Australia for self-managed super fund investment in crypto assets. We do that through a variety of ways, and we work closely with really the best accounting firms that look after crypto as well. So yeah, this is going to be an opportunity for you guys to talk with both myself and Natalia beyond this webinar. But for now, let's jump into the budget, which I think it's probably one of the most engaging topics I've seen in a while when it comes to the investor space. So I want to kind of just have a look at particularly crypto is obviously the main asset we're talking about today. Superannuation, those who have crypto held within an SMSF, how does it impact you? And also those who hold it within your other entities like personal, trust, and company. So The next slide's the critical one, where we can actually have a look at the changes that have been proposed. And I think actually right now today in the government, they are actually working through the House to decide whether this goes through or not. So one thing I'd like to do is pass across to our resident tax expert, Natalia, and just give us a breakdown of these different entities and what it would be like if you were investing in crypto assets within each one under this new budget.
Thank you, Tom. So first of all, guys, you have to understand this is not a law yet, and it will or might not pass the government. So that's the first thing you have to understand. So these are just proposals and changes to the legislation. Number two, which we don't have the technical side of it. So we have not seen the actual law. So we don't know exactly to every single detail how it's going to work from the technical point of view, from the tax agent's point of view. So it's all the, I guess, high overview level of the tax proposed. But what we know is that Labour proposed to change the capital gain tax. And instead of having the discounts, which we have in the personal name, in a trust, there will going to be no discount at all. So what it means if you have any assets you invest into personally and you hold it in a personal name, at the moment, you do have a 50% discount if you hold the asset for more than 12 months. In your personal name, hold for more than 12 months, that's it, 50% discount on the capital gain, which is very handy, especially if you have a cryptocurrency, because obviously we want it to go up a lot and we want to have this discount. However, proposed legislation will have no discount in the personal name. And it means that you get only indexation of the cost based of the asset. So what it means, say, for example, there is a 5% inflation in 2028 or 2029 financial year. So your original cost based, this is how much you paid for the asset. It's going to be indexed on that exact amount, which is a 5%, for example. That's it. This is the only thing which you get. This is only discount you get. And you have to pay a tax on the rest of the capital gain. And minimum tax is 30%. You have to understand as well. So if, for example, you don't have any other income, and if you only made 20 grand of capital gain during a year, so technically, if you look at the tax rates, you should be paying zero tax, because under like 20 grand, there is zero tax payable. But with the capital gain tax, you will be paying 30%. So 30% is the minimum, and 45% is the maximum marginal tax rate for the individuals. So this is what you will end up paying with the new proposed legislation if you hold the asset in a personal name. If you hold the asset in a trust, again, we have a minimum 30% tax, which means that if you have, for example, family trust, and you want to distribute your income to the family members who are not working at the moment or who are on low income, even if they are not working, even if they are on low income, say only making 20 grand a year, you will be paying 30% tax on that income, no matter how much income you have. So again, this is just to stop people distributing money to the low income earners in the family. Say, for example, children who are studying and not making any money, not receiving any income, they will be paying 30% tax on trust distributions. Then we have a company never had a discount, so you will be paying 25% tax or 30% tax in the company, so doesn't matter. But again, we are talking about 30% minimum. And then we have superannuation funds. The new proposals, they didn't include they excluded self-managed superannuation funds. Explicitly, what it means that there is no change for the self-managed superannuation funds. In SMSF, whatever the law or tax used to be, whatever the tax is now, it's going to continue beyond 2027 financial year. And in SMSFs, we pay minimum tax, and it's the most tax efficient entity in Australia. So you pay maximum 15% tax on the income or on any capital gain in the first 12 months, and you pay 10% tax in SMSF after 12 months for the capital gain, and zero tax in the retirement stage, which we are going to cover later. But just thinking about it, 30% outside of super minimum, and 15% is the maximum inside of super. This is what you have to understand. That's it.
That's a really good breakdown, I think, of the changes. And I think there's some good clarification there, because I think some people are not aware of how that indexation works. Some people assumed maybe it was attributed to the actual capital gain itself. But what you're saying then, Natalia, is it's based on the initial capital of the investment, or
we don't have this information. And this is what I'm saying, that
okay.
Technically we don't know exactly how indexation is going to look like. The most experts are suggesting that it's going to be indexation of the cost base, but again, we don't have this information yet.
Yeah. So for those of you who kind of been in the crypto space for a while, myself, I've been an investor for a long time, and I think this is really important to see that these changes, should they come into effect, will really drastically change the way a volatile asset class like crypto gets taxed, because it may be favorable in certain circumstances with a much more conservative asset class where it is paced with indexation perhaps over the course of a longer time frame. But as we know with crypto and the market cycles, you've got these 4-year windows where you have huge swings up and down. And I think having that entire capital gain under this new system, this is why people are starting to consider whether they need to restructure. I know a lot of people, since the budget was announced, I think have gone to speak to their accountants and financial advisors to really try and wrap their heads around, well, how do we grow and preserve our wealth in the crypto asset class under these rules? So that's really good to go through, and we'll move on now to a bit of an example that might just help clarify and really give us a good scope on what a real outcome would be. So under this trade, you've got an example of $100,000 invested. Let's say it's gone into Bitcoin. This is in the 2007 new financial year. We say within a 12-month period, or after a 12-month period, the asset sold for $500,000, and so you've made a $400,000 gain on your Bitcoin, which has been held over that 12 months. So previously, or under the current rules, as Natalia mentioned, you would get that 50% discount on the $400,000. The $100,000 obviously is your initial investment, which you recoup. Now, we're comparing outside super. So this is your personal, your trust structures, and we're comparing inside S Super, or the SMSF, which is really the only vehicle for pure Bitcoin exposure currently with superannuation. And so we can see there's some really massive differences between these tax bills. And that's on the conservative side. As Natalia said, that's at the minimum tax rate. Of course, if you are someone who might be earning a higher salary, closer to that, 120, 150K or 100K plus, really, this gain, or majority of this gain, will fall under the highest bracket. And so I know a lot of crypto friends of mine who are, who have a lot of their wealth in crypto, are basically looking at this and trying to strategize how to continue to have a capital to grow outside of super, because obviously we understand that we can't access super straight away, but also understand that to save on tax and to minimize the impact, that the inside super gain is something to consider. So What are your thoughts, I guess, Natalia, looking at these differences here?
Look, in the self-managed superannuation funds, like I said, even now you're paying the minimum tax in Australia. So it's always been the most tax efficient vehicle from the tax perspective. However, after this budget's proposal, I feel like the gap became even bigger, and it means that superannuation really became more like a way how you can grow your wealth. And not only because obviously you can control your super, but also you save on tax. So it means instead of making like $400,000, for example, gain in, be in the same position, you only have to make like 300, for example. Obviously, like compared to if you hold the Bitcoin or if you hold crypto in your personal name. So basically, it's becoming more. It's not only about the gain. It's not about how much the crypto will grow, but also how much tax you pay. Because if you are paying 30% minimum in tax, then 30% of your gain is gone straight away. So that's, this is how I look at it. So it means that in SMSF, for example, and in SMSF, we always say, look, it is a vehicle where you have to be aware about sole purpose test. And what sole purpose test says is that SMSF has only, superannuation has only one purpose, which is to provide benefits for someone in retirement. So when we look at the SMSF and investing through the SMSF, we always say to our clients, try to stay conservative. Try not to use SMSF as a Russian roulette and gamble. So, and especially with the cryptocurrency, as you know, because there are a lot of projects and there are risky projects, risky coins, etc., etc. The SMSF is a vehicle where you don't need to be risky. You can be very conservative with your coins. You can invest, and again, it's not an investment advice, but you can invest in the top 20 or 50 coins and still make a good money because you are saving on tax. This is what I'm trying to explain when we have the clients, for example, who are really excited about cryptocurrency and they want to invest in all these like other things out there. And like I said, in crypto space, there is a lot out there.
Mm.
And very often they end up with the investment which goes down, for example. And in that way, like you basically misusing your superannuation. And this is a breach of a sole purpose test in the eyes of the ATO, in the eyes of the government. So now with this proposal, the tax saving gives you this advantage. The tax saving gives you this growth, extra growth or extra wealth, which you can't get outside of super.
Yeah,
So that's, yeah.
it does. It leans into a more tempered approach because it is long term. The tax savings are obviously very good as you move through your accumulation years into pension. And I think crypto already, as we know, is a volatile asset class. So I think, yeah, jumping straight into untested assets in this space can be done through your personal name, of course. It can be done through all these different ways, but I think having a really good hard think about your strategy when you're setting up the SMSF and making sure that it is actually compliant, because as Natalia will explain, the self-managed part is critical. Whilst your accountant and your exchange, your trading platform can provide you with a lot of support, those critical decisions that do impact your compliance and of course the actual outcome of your growth of your super, they're on you. So that's an important thing to note. Let's have a quick look now at, I think, what is just a little bit more detail around should this come into play, how does the timeline look for investors right now? And I think we want to understand what sits in this grandfathered kind of legacy system, I guess it will become in terms of rules, and what goes into the future treatment under this new budget. So Natalia, what do you see as these different timeframes, and how would an investor who maybe has no assets currently, or an investor who does currently hold assets, how are they going to be impacted by this?
I think it all depends on your strategy and if and again, like how much gain you already made in the past. So for example, if you hold the asset which you bought, say many years ago, and you already made whatever X amount of of gain on this asset, say Bitcoin you bought like 5 years ago, then you might consider selling it before the 1st of July 2027. So you pay 50%, so you get the 50% discount and you pay less capital gain. So, however, it's very hard to predict what the price of your cryptocurrency is going to be on the 1st of July. So it's not only about tax, but obviously it's also about, did you make any money or you didn't make any money? So I guess, you should consider it closer to the 1st of July 2027 and evaluate if it's worth selling it and paying 50%, getting a 50% discount and paying the tax on 50% only, or you continue holding that asset past 1st of July 2027. Because obviously after the 1st of July 2027, whatever gain you get, you will be paying the full tax minus indexation, whichever, we don't know how much it's going to be. Obviously, every year it's going to be calculated by the government or by the ATO. Also on the 1st of July 2027, this is where the market value of this asset is going to be determined as well. So you have to understand that ATO probably will have some sort of like a calculator online on the 1st of July 2027, where you will be able to go online and calculate what is the market value of this asset, which makes it very interesting because we know with the market value for the cryptocurrency, we don't have the one source of truth. So say if we pick Bitcoin, what is the market value at 30th of June or at a certain day? Which exchange do we look at, or which source do we look at to determine a market value? I don't have any idea what ATO will take as a source of truth. Is it going to be the average of, I don't know, 5 exchanges, or is it going to be some online source, like the biggest online source, where ATO will have sort of like as a base for the market value on the 1st of July? We don't know it either. So again, because we don't have the technical paper behind this proposal, we don't know how technically it's going to be worked out. But we know what on the 1st of July, the market value needs to be determined in order to calculate, obviously, the capital gain going forward.
Yeah, it is. It's a significant decision, and I think I've been following. I started my journey with crypto in my mid-20s, which was a good, 2016 is a while back now, and I've always been a big fan of the analytical approach, following the trend lines of the asset and the math behind the asset to give me a bit more of a grasp on where it may sit comparatively to historical prices, and using some of these trend lines to try and get a better understanding of where we sit today. And obviously for those who are tapped into crypto, and particularly Bitcoin, we are in the midst of what is, commonly seen as quite a bear market movement. And I think this is it's quite an interesting time for a budget like this to pop up, particularly for Bitcoin as an asset, because it's a transitionary price where we're moving from these really high, all-time high prices that we hit last year in October, November, and we've had a significant correction. And as Natalia said, what happens from now until July 1st is going to be a really, I think, an interesting story, which will probably have a massive impact on Australian crypto investors and how they manage that crossover date. Because for some of us, it may be that we have a good price action over the next 8 months or so, or however long it is, 12 months, and yeah, there's an opportunity to capture that discount. Or alternatively, if we stay in historically low levels all the way up to July 1st, and then we go into your next accumulation growth phase that can happen with Bitcoin, then suddenly the actual gain you're making from that date falls under these new rules. So definitely something for us to all kind of consider and maybe try and strategize. And we do have to wait and see beyond that. So happy to move on to the next slide, Natalia.
Yeah, I also want to say that, once we have more information, there might be strategies available to switch from, say, for example, investing personally to investing in self-managed superannuation fund. For example, if you sell, like your assets in your personal name, sell your crypto in your personal name, realize the gain, or maybe even realize the loss, if, for example, your cryptocurrency went down, and then switch to the SMSF and wait for cryptocurrencies to start going up, and then obviously in SMSF you only pay 10% tax. So this could be one of the strategies, again, for someone to consider. It depends on where your position is at. So is it up, is it down, how much you have, and how old you are, etc., etc. There are a lot of things to consider if you're thinking of switching from the individual name to the or trust or company into the SMSF.
Yeah, no, absolutely, I agree. And hopefully we can keep working through some of that information in this session. So now we move across to a bit away from the budget, and this is specifically just to do with what Natalia just mentioned, which is these different journeys that people are on, life cycle stages. From, if you're starting an SMSF up and you're perhaps in your 30s, as opposed to someone who might be considering it closer towards their pension phase. So, Natalia, how do these different demographics, what does the tax on the SMSF, how does it work for them in these different ages?
Yeah, so people, when the people are in just early stages of their life, when I say early, I say people under 60. This is what we call early stages in the superannuation, because if you're under 60, you can't access your super and you're paying 15% tax or 10% tax. That's, like the one thing you have to remember. Once you turn the 60, potentially we can move you in so-called pension phase. And in pension phase, you'll be paying zero tax on income, zero tax when you take it out. So there are certain conditions you have to meet, but just think about it at 60 as a minimum age where you can meet these conditions. And what it means the older you get, the better SMSF, or superannuation in general, but from the control point of view, it's SMSF where you can invest in any asset class you want. So the older you get, the better SMSF gets for you from the tax perspective and also control perspective, because moving to pension phase, it's not only paying zero tax, but also you will be able to withdraw the money at any time, any amount, and pay zero tax. There are limits, and this is what I have to mention. Say, for example, if someone has 5, 10, 20 million, it doesn't mean that they can pay zero tax and withdraw any money and again pay zero tax on it. Obviously, government tries to prevent people misusing this vehicle. And there are limits how much you can put in this tax-free environment, which is, as of today, it's $2 million per person. This is how much you can put in a zero tax environment when you meet the certain conditions. And like I said, number one condition is reaching the age of 60. And from the 1st of July, this becomes 2.1 million. So 2.1 million from the 1st of July could be moved into tax-free environment in any superannuation system, and it's per person. So if you have two people in SMSF, it's 2.1 per person, it's 4.2 million. If you have more than 2 million or more than 2.1 from the 1st of July, it's okay. You still can keep it in the superannuation system. You'll just be paying normal tax 10% or 15% for the amount above 2.1. There is another tax, though. I know it sounds complicated, but this is a government, they like making things complicated. So there is another tax, new tax, which is coming into effect from the 1st of July 2026, from this financial year, and it's called Division 296 tax. So that's additional tax. We will discuss it a little bit later. Or do you want to discuss it now, Tom?
Well, no, I think, look, I think we will discuss, because that is the next thing we want to talk about. But I think it is good for people to be aware of, for the bulk of your time running an SMSF before 60, it's a nice, simplified environment of long-term investments will get what is it, like a 30-ish% discount from 15 to 10%, which is incredibly low. And so it does give you a great opportunity to, if you're making good investment decisions and you're active, some people aren't active and they are buying and holding and forgetting about it. Whereas some people are active, they're very, their education and their strategy is more dynamic than someone who is just set and forget. And I think that's where and I personally fall into that category. It's where that 10% long-term held or the 15% short-term still becomes quite powerful, because if you are someone who's tracking the crypto market cycles, which we've seen is quite a strong trend line, there is opportunities to enter and exit assets and to hopefully compound your wealth. But you do just need to be aware of a portion of that is going to go into your end of financial year tax and will need to be paid out with the help of your accounting firm. But beyond that, the Division 296 is something that I think some people won't be aware of, but it was a big talking point when it was introduced. And I think we'd all like to get to a point where we have a large, enough super for this to impact us. But what does it mean for those who start to find their super or their SMSF reaching these kind of valuations?
To be honest, it doesn't mean much for majority of people, because most people would be under this 3 million threshold anyway. And again, this is per person. It's not per the super fund. It is per person. So most people will be under this $3 million threshold. But even if you are between 3 and 10 million, you only pay, like extra 15% tax. It's still better off than having this money invested in your personal name. And we've done a lot of modeling in the industry to prove the point that even with this additional 15% tax, most people in most case scenarios will be better off keeping the money in the superannuation system. So after you reach 10 million, that slightly changes, because obviously there is additional 10% tax. This will depend on the situation, on the return, etc., etc. So if you're under 10 million, don't worry about it. Still use the superannuation as your wealth growth and wealth creation vehicle. If you're over 10 million, then there are strategies available, and like obviously there are not a lot of people in that category, I assume.
Yeah. Now these levels, are these fixed, or are they indexed at all?
Yeah, it's going to get indexed.
Okay.
And so, yeah, it's not going to be 3 million in 20 years. So, say, for example, if you're 40 now and you're thinking, oh, what's going to happen when I'm 60? Is it still going to be 3 million? No, it's going to get indexed. So, you will get increase. Maybe in 20 years, it's going to be, I don't know, 5 million. But obviously, it's the indexation works as a official inflation, whatever official inflation will be. This is where they index it, and it's usually in some increments of like $100,000 or something like that.
Yeah.
So we will see increase of the threshold. However, obviously you need to be aware about this additional tax, especially if you're building wealth and you're building it quickly. That's, you will have to pay extra. But again, like if you are under 10 million, you still will be better off in SMSF, so in
Yeah.
superannuation system.
Now that's I mean the indexation is definitely a reasonable addition. Now this probably goes towards back to the budget almost, because this is where restructuring, I think uh, this is a key part of restructuring, or maybe making that decision around is an SMSF suitable for me, would be how much do I have in super? And if I am intent on moving towards a self-managed environment. Uh, I feel like perhaps, I'm not quite there, or I want to add more to whatever is my balance. These are the pathways, the compliant pathways to add to your super. What are the changes, and how do people use these different ways of contribution?
Yeah, the caps are going up from the 1st of July, like you mentioned on this slide. So at the moment, concessional cap is at 30 grand. This is what your employer is putting into your super, and this is what you can put in addition to your employer and claim a tax deduction. So the maximum per year per person, it's a 30,000 at the moment. From the 1st of July, it goes up. So the good thing about it is when you put money into your super using this cap, you also can claim a tax deduction in your individual tax return. So if your marginal tax rate is, say, 37% or maybe even 45%, you're only paying 15% in your super. So, but by putting the money into your super, claiming the tax deduction, you are saving 45% minus 15%, you are saving 30% in tax. So instead of giving it to the government, you invest in it for your future. The one thing you have to understand, obviously, once you put the money in to your super fund, you cannot take it out. You cannot change your mind tomorrow and go to your super fund and say, oh, can I get my money back? No, that's it. Once it's in, it's in. It's locked up until you retire, which is the age of 60 minimum. That's one thing you have to understand. Also, non-concessional, this is the second most popular cap for the superannuation. It's a non-concessional contribution cap. This is where you can put after-tax money. Say you've got inheritance or you sell the assets and you've got some cash, or you save up and you already paid tax on it. So money sitting there, so you can put as after-tax money. You don't claim a tax deduction, but it doesn't get taxed either. So that's important to understand as well. But there is a limit. The limit depends on what your total superannuation balance is. Total superannuation balance is calculated by combining all your superannuation from all the superannuation funds. And obviously, if you have more than 2 million in all the superannuation funds, that you cannot put after tax money into the superannuation environment. The government's done it to protect, to prevent people putting money in the superannuation environment and putting like a millions in superannuation and then using this vehicle and paying only 10 or 15% tax. So from one side, government wants to encourage people to put more money into super, giving all these concessions, tax concessions, contribution concessions. But from another side, they're trying to prevent rich people. This is what government, considers people to be rich. If you have more than 2 million, I assume this is what the definition of rich from the superannuation point of view. So government trying to prevent people who have more than 2 million in super to put more money in and pay only 10 or 15% tax. So just think about it. If you are in this bracket under 2 million, then you still can put money in 32,500 and claim a tax deduction, or 130,000 after tax money, or you can put 390,000 in 1 year, but it will cover 3 consecutive years. It will cover this financial year and two next consecutive years as well. So, but you can put it in one go. These are the most common, I would say, caps used in SMSF or in superannuation space. There are other contribution caps available or other type of contributions. The downsides are when you sell your house and you're over 55, when you sell your business, you can put a lot of money into super, but it's more specific and requires a strategy for someone who wants to put more money in.
Yeah. No, that's the government wants you to do well in super, but not too well. I think
That's exactly right.
is the message from that. But
Yeah.
I think those are really important parts of maybe what comes with this new budget is, can these caps and these contributions be used to your advantage depending on all the different strategies in place. Whether you do decide to keep funds in personal trusts, you may decide to do contributions depending on how high your gains become. To kind of try and minimize that tax outcome. So it's really important to wrap your head around what limits you have and when you can use them. So we're going to move on, and look, we've done well, guys. We're 40 minutes in, and I want to make sure we got time for questions. But I want to run through some quick kind of questions I often see from the trustees, which are the investors, the self-managed super fund investors who come to our platform. I think this one we've talked about this a bit today, but the first one, Natalia, is most people, and I think even going back 5-10 years, it was probably even more conservative. How much can you start up? Do you need to start up a self-managed super fund?
This is a very common question. I get it all the time as well. You don't have to have a minimum amount. You just have to have assets. This is what legislation says. In order to start your SMSF, you have to have assets. When you pay for SMSF establishment, technically it is already your first asset. However, obviously you have to understand that SMSF has to be cost effective. So you have to, if you only have 20 grand or if you only have 30 grand, you have to calculate how much you're going to pay for the annual compliance, for setting up SMSF versus how much you're going to make. So we've seen people starting SMSF with 100,000 and up. However, we've seen people starting SMSF with even 20 and 30,000. Again, it's not a recommendation. It's definitely not my decision. It is your decision, guys, to decide to make this choice. And it could be like there are different reasons why people start SMSF, but main reason it's a control. People want to have control no matter how much, and it doesn't matter how much it costs them, basically. That's the reason, yeah.
Yeah. No, that's I think that's very clear. And I think that's a common thread with people who follow the Bitcoin thesis, is that a lot of it is around sovereignty of wealth and getting outside of maybe a system that isn't as appealing. So on the mathematics behind, is it worthwhile for me? Walk us through maybe your first year of
Yeah.
setting up that fund and what it could look like.
Yeah, so to set up a SMSF, obviously we need to set up a trust. We need to apply for EBN, TFN, ESA, and this is what we do. We do it like we do everything for you to set it all up, and you will be ready to start investing in 2 weeks. That's how long it takes. But in the first year, the first step is to set it all up. The second step is start investing, obviously, to set up account like with CoinStash, and have your investment strategy ready. Know what you are going to do with your super. It's very important to have this clarity before you set up SMSF. You have to have, like, at least you have to have understanding where you're going to start with which asset class. And then in the first year, SMSF has to lodge a tax return every year. So in the first year, your job will be understanding the rules, keeping all the records, and learning how to manage your own SMSF. When we set up your SMSF, we have educational session, and we teach you everything you need to know about SMSFs and how to run your own SMSF and what you can do with your super and how to stay compliant, especially if you are thinking investing in crypto, because this is very regulated. SMSFs are very regulated, and you need to understand how to stay compliant when you invest in cryptocurrency. So it's very important. But again, this is all doable, and you just need to have the right support of the professionals. Right support or when you set up SMSF, right support when you start investing and say, for example, buying crypto. So you need to have this onboarding support, which I believe, Tom, you provide, guys, very good support for people. And you need to have this, someone on the phone or someone on the email if you have any questions, because you are playing with hundreds of thousands of dollars. You are playing with your future. Don't just take a shortcut. Don't try to do it yourself. That's my advice. My advice for you. Just find the right professional who can assist you with this journey, and focus on making money, not trying to cut the corners. In
Yeah.
terms of the crypto, yeah, can I move crypto in SMSF? This is another very common question. People say, oh, I already have Bitcoin. Can I just put it in my SMSF and pay 10% tax after 12 months? No, you cannot move money. Sorry, you cannot move cryptocurrency into the SMSF. You have to sell your crypto, put cash into the SMSF, and then buy your crypto again under SMSF name. And this is where, when I talked about strategies, this could be one of the strategies to sell your crypto, which you hold, say, in the trust name or personal name, and move the cash into the superannuation environment and buy it back. You will be paying, you will be responsible for your capital gain or capital loss in your own name or in the trust name. Of course, if you sell it, yes, you will be paying, you'll have to pay your capital gain tax.
Yeah. No, understood. And that goes back to the non-concessional and concessional types of contributions you
Correct.
can make. Yeah.
Correct. Yeah, this is how you can put more money into super using these cups.
Now, next is, I think, and I think this is very important, and I think a lot of we're at a good place in Australia's industry. Back when I started, there was very few platforms that had built out security measures, trust, in the way that they operated their services. And I think these are the kind of key things that CoinStash have focused on and made sure that are part of our platform. I'll run through them very quickly, but our first thing we want to focus on is the reports. So, we are one of the only exchanges in Australia that provides probably one of the highest standard of end of financial year reports, which has been audited before it actually goes back across to your accountant. And we found that, a very high amount of auditors sign off on that standard. So it is really important, as Natalia mentioned, maintaining compliance in your fund does come back, a big portion of it comes back to, are you providing assurance each year that you are behaving in an appropriate way? The next thing that I think is also a critical one is accountability. So not just we actually audit our own platform annually. We bring in an external accounting firm from Melbourne called Hall and Chadwick, and they come in through. They look at our assets, our liabilities. They look at our treasury, which is held 1-for-1. And what that basically does is it tells the clients who use CoinStash, what are we doing with the funds that we hold securely in which is our, as you can see there, our custody environment, which is held through Ledger and Fireblocks. So those are the first two things. Reporting for an SMSF is critical. Trust that your platform is auditing themselves. So providing that yearly reassurance that they are looking after your assets and also are a responsible company as a whole. As Natalia mentioned, local support, because we deal with a lot of self-managed super funds, we are focused on having dedicated account management. You basically have someone like myself available, throughout the day to actually talk to. So that's critical. If you want to talk about large trades, custody decisions, or end of financial year responsibilities, we're able to actually talk to you day in, day out. The last one, which is not as applicable to SMSFs, is our assets. We've got over 1,000 assets on platform. I do lean with Natalia in thinking that your top 20 assets that have been through multiple cycles and truly tested are typically probably more suitable. But at the end of the day, that's something you need to work out as part of your investment strategy. This is very common as well. I think a lot of people are pretty passionate about the idea of controlling their crypto, whether it's in their personal name or in a self-managed super fund, and not having a third party involved in that custody. Natalia, just quickly, what is the process for maintaining a compliant fund, but also holding your own crypto?
There are a few things people need to understand when they choose, for example, between keeping their crypto on the platform or using the cold wallet. We support you whatever decision you make. We tell you exactly what you need to provide for the auditor. We guide you. We make sure that you're compliant. We make sure that the auditor will sign on the audit report. But this is a part of education. This is a part of the session when you sign up with EasySuper. We have like 2-hour session where I explain you everything you need to understand and you need to know about SMSFs. So we guide you. If you already have SMSF, again, if you move to EasySuper, we guide you as well. We educate you. We tell you what to do. And one important point, actually, I want to emphasize about the CoinStash as the exchange. And I actually had a session with my new clients yesterday, and I shared with them the same important point that when you need to choose the exchange, for example, there are a lot of exchanges in Australia, right? And you don't know which to choose. From the SMSF compliance point of view, you need to choose the exchange, which has a few things. Number one is that you can open account under SMSF name. Account must be under SMSF name, not a personal name. And number two, you have to choose a platform which has GS007 type 2 audit report. And this is what Tom was mentioning in his previous slide, that CoinStash does have this report, GS007 type 2 audit report. This is where the auditor confirmed that CoinStash has internal systems and controls in place. And because independent auditor confirmed it, SMSF auditor can accept the report from the CoinStash. If exchange doesn't have this GS007 report, the auditors don't accept the report from this exchange. They look at it, but they qualify the audit report. That's a difference. So you have to understand that knowing all these nuances, the only This is why when I said, you should obviously engage professionals, or you should engage the best in the industry. So because the crypto is very, very compliant asset class. And if you don't understand, or if your accountant doesn't understand, or if you just pick random exchange, which is overseas, because you want to save, I don't know, like $5, it doesn't make a lot of sense from the compliant point of view, because you will lose more when the auditor will qualify your report and report you to the ATO. That's one thing you need to understand. Be very careful who you engage and who do you work with.
Yeah, no, that's good. It's important stuff, guys. I think there's a lot of there's some great operators in Australia when it comes to accounting, when it comes to the platforms, the investment platforms. So it is good to do your research. And yes, you can self-custody these assets, but doing so with an actual well-educated approach is critical. Now, this is a good little breakdown. Just if someone is looking at the SMSF and they're actually interested in setting one up. Natalia's kind of put together a bit of a guide on what that process looks like. What would that period of starting to finish, ready to trade look like on a kind of a high level view?
It's 2 weeks. So in 2 weeks, we will set up your SMSF. We will open a bank account for your SMSF. We will assist you with the rollover, and also we will educate you. So in 2 weeks, roughly, again, plus minus, you will have your SMSF ready. And then obviously, once we set up your SMSF, you can open account with CoinStash. Only after you have SMSF structure set up, you can open account with the exchange. You can't do it before.
Yeah, yeah, that's it. So just keep that in mind, guys. If it's something that you're looking at and you're curious about what that end to end to get the actual fund up and running and verified, that's what it looks like. And I think Natalia's team, because they specialize, because they're dedicated to it, that they are a lot faster and a lot more efficient in this process. And I think this masterclass that they offer, which is a full scoped education all the way through that journey and ongoing, is something we're just going to quickly touch on here.
Yeah,
Natalia,
so we offer,
yeah, tell us
we
about
offer
this.
SMSF with SMSF establishment, we offer SMSF Power Masterclass. And this is 1.5 hours, 2 hours, like I spent 2 hours yesterday, where I will explain you everything you need to know about SMSFs, how to run your SMSF, how to stay compliant, how to put more money in, when can you access your super, and much, much more. So I educate you not only on crypto side, on everything you need to know about SMSFs. And this is something where you can do not only once, obviously you can repeat this masterclass. And this is what will set you up for the next 10 or 20 or even 30 years. So without understanding the rules, it's like like you monkey, you have a car and you're a monkey. So driving, the monkey can't drive the car. Yes, it's a great vehicle, but if you don't know what you are doing, if you don't know how to utilize it, then you are missing out on the potential strategies. You are missing out on the potential wealth growth. That's very important to understand the rules. And we are big on education. So yeah.
Yeah. And now, just quickly, guys, if you are kind of looking closely at setting up an SMSF for the first time, this is just a quick breakdown of
Yeah.
some of the value you're going to receive from Easy Super, from working with Natalia. As you can see, there is a lot of components and costs that go into having a compliant and well-established fund. I know Natalia has recently told us that she's going to be doing a discount for all of the community here today. So that's packaging all of this up for $3,000, which is fantastic. So Natalia, thank you for that. And if we just move across here, guys, if you are someone who doesn't have an SMSF and it's something that you want to just explore, you can use that QR code there. If you're running an SMSF, you'd like to get a CoinStash account set up to start investing, we've got our QR code. Obviously, Natalia and myself, we work very closely together to make it kind of a seamless experience from setting up all the way through to the investing and custody and reporting. So this is the whole point. I think self-managed super funds and crypto in particular as a niche emerging asset is a scary, complex environment for anyone. So making sure that you're working with uh, Australian, platforms and companies that specialize and have the background and experience, I think it's worthwhile. Now we've got a couple of minutes where we're actually over time. It's been really great chatting with you, Natalia, and I just wanted to say thank you for spending your Friday afternoon with us. We always appreciate it. Let's jump into some questions if we have some questions here. Uh, Let me
I think I
just.
answered most of it. I think there is a question for you, Tom. How
Sure.
easy is it to set up a SMSF account in CoinStash?
Yeah, so look, the hard part, guys, is the fund setup with the accounting. So CoinStash is simple. As Natalia mentioned, we can set up an account within a 24-hour period quite easily, as long as we have a deed, of course, with a compliant self-managed super fund that's been registered with the ATO and up and running. You can get your account set up, and then I think the banking process can delay some things maybe by a day or two. However, we work closely with staying on top of the different banks and their kind of the way they approach the in crypto transfers. So we've got a good system where I think, yeah, within a day or two, you can basically have your account up and running and investing. Yeah. Natalia, I can't see the questions, so let me know if there's
Yeah,
any more.
so okay, I think all the questions and answered. The only question is, okay, with the company or individual trustees, we set up SMSF with the company. There are a lot of reasons why it's better from the asset protection point of view, from the auditor's point of view, from the compliance, from administration. Just trust me, don't try to save I don't know, $500. And this is one thing I don't understand when people trying to save $500 on the company establishment and using SMSF, sorry, in setting up SMSF with the individual trustees because it's cheaper, and then you're investing hundreds of thousands of dollars. So it doesn't make any sense, guys. Do it properly. Listen what professionals tell you. And as a professional, I tell you that it's better to set up SMSF with the company from a lot of reasons. So
Yeah.
that's my answer.
Yeah, I think it seems like the industry has moved towards most funds falling under that structure. It just seems like that's become the preferred way to set things up.
Yep. And hi, Tom. Are there any CoinStash SMSF fees?
Yeah, so that's an important one. We don't charge anything for your account creation. We don't charge anything for the account management or custody or reporting. So all of those things come as part of our service. Where you see a cost is the trade fee. So as soon as you go from one asset to another, whether it's fiat, AUD to crypto, or from crypto to crypto, there is a trade fee basically. So uh, to be to break it down, there's two pathways for purchasing or selling assets in almost pretty much all of the Australian platforms. On the apps and websites, you'll find a trade fee, which is publicly shared, and you'll often find a spread, which, for all intents and purposes, is an extra fee that most of the exchanges will charge, and is to cover the cost of acquiring liquidity. So for CoinStash, we have a 0.6% trade fee and a 0.85% spread on our trades. So if you were to trade some Bitcoin on our Apple website, it's approximately a 1.4% trade fee, 1.4, 1.5. We do also offer something that some of you are probably familiar with. It's called OTC, which is over-the-counter trading. It's a private brokerage desk. We run that through our own chats with the clients and several members of our accounts management team. The benefit of that service is it's a flat 1%, which is a very competitive fee in the Australian market. It's personalized service, so I could ask for a quote anytime from 8 a.m. till 11 p.m. It's got to be a minimum trade size of $20,000 to use that service, but you get an approved fee and it's a guaranteed execution. which we settle for you in your account. So it's quite a nice way to do those larger, more nerve-wracking investments, which typically a lot of SMSFs will come in and they may, like I said, not be on the kind of more dynamic side of investing. They just want to get a large single purchase through. That is a really suitable service for that.
Yeah, I think
Fantastic.
we've got no questions.
Great.
So thank you so much, Tom. Thank you so much, everyone. I think it was a great session. So
Yeah, no, thank you for joining us. For everyone, thanks for joining. We'll be sending the recording across to you after this webinar, and keep your eyes out for some more sessions in the future.
definitely, definitely. So thank you, everyone, and
Thanks,
have a
guys.
great afternoon.
Have a great Friday. Bye.
Thank you. Bye.